So, the good news for multifamily buyers is that it's becoming more of a buyer's market now. Prices are softening. So no more having to bid for good properties, no more having to waive feasibility and rush through due diligence, and no more having to close in 60 days or less, having to pay for those annoying extensions. But don't get too excited because what you likely have to do if you are a serious buyer is burn the midnight oil, sorting through a lot of overpriced, low yield properties to find the one that just might have some life in it. And this is going to be a pain because most would be sellers are waiting for rates to come down to put their properties up for sale. So there's a record low inventory right now, according to CBRE. To make this task even more daunting, you really should find a property that is being sold on actual, not potential cash flow. Good luck on that one. And ideally, it should be in a good neighborhood where tenants have good jobs and pay their rent on time, as there sure is a lot of talk about a recession around the corner, isn't there? Now, if you are one of those rental property investors who can't stop searching for properties for sale, even during tough economic times like we're going through right now, then you're going to want to watch the rest of this video as I'm going to go over six critical mistakes that you absolutely must avoid when buying an apartment building today. And I think you're going to be surprised on some of them. Hi, I'm Terry Painter, the president of Apartment Loan Stores since 1997, where we have over 40 multifamily loan programs to choose from. I'm also the author of this big book, The Encyclopedia of Commercial Real Estate Advice, which has everything from A to Z on the subject and lots of great stories from my clients. And I promise that this is not going to be a boring book. So let's get into the six mistakes to avoid when investing in multifamily properties today. Number one, buying on pro forma numbers. What are sellers trying to pull here? Most are still trying to justify premium prices today by showing the property's actual net operating income side by side with enhanced pro forma numbers in the offering memorandum. Okay, I get it. They are still pretending that this is 2021 and 2022 when rents and sales prices were going through the roof and mortgage rates were low and there were so many buyers with cash to burn up to line up to buy every property. But come on now, you wouldn't buy a business, let's say a restaurant based on its potential, would you? I don't think so. So if there was ever a bad time to buy an apartment building based on its potential, it's now. Why? Because during the last quarter of 2022, we moved into a different economic cycle. We were in the expansion phase where rents and prices were soaring and vacancies were coming down. And now we are in the oversupply phase where most properties are overpriced with very poor returns. Oversupply is in like there's like close to 780,000 new units coming online and vacancy is expected to hit 6% in 2023, according to Fannie Mae. In my book, I go over four economic cycles of the real estate market in detail and make it clear that the oversupply phase is the riskiest time to buy. This is because prices are still high and a recession phase is probably coming next, and that's when prices usually drop. And so that's probably a better time even to buy, but there still could be some good deals now. So no, don't buy a property based on its potential numbers right now. Okay, so let's get into critical mistake to avoid when buying an apartment building. Number two, not projecting rents and expenses conservatively. Okay, so it's really important during the oversupply phase that you don't paint a rosy picture for the future in your pro forma. This makes sense, don't you think? Conversely, you need to do the pro forma conservatively from accurate market research on rents and expenses. Now, you don't have to do what I often do and pay for extensive reports. You could just talk to some property managers and commercial real estate brokers and also look up rents on similar properties online. Just find a property that has a similar size and quality as the one that you want to buy. Okay, and here's some parameters you must follow when doing your pro forma. Okay, on the income side, raise rents moderately. With rents being flat and Fannie Mae only predicting a 1.5% increase for 2023, I think they could easily go up to 3%, but I don't think much more than that as far as rental increases. You want to plan on modest rental increases throughout your first year. It might even pay to keep rents where they are for your first 4 to 6 months and wait and see what happens with the economy. Yes, you want to focus on keeping the place full. That's like really going to be important if we do have a recession. And then show a small increase of 3% over the remainder of your first year when you feel like things are maybe a bit stable. Okay, sure. If rents are grossly under market on the property you want to buy with mostly professional tenants in a good neighborhood, then try raising rents to market as soon as you can. But if we are pushed into a recession your first year, you don't want to get stuck with a high tenant turnover risk. In fact, probably one of the worst scenarios is actually buying in a working class neighborhood. And in that case, you should pencil in some credit loss for slow paying and no paying tenants, and also for some rental concessions. A rental concession is like, when a tenant puts first and last month's rent down and a security deposit, maybe after 6 months, they get a month free rent or a half a month free rent. Okay. Now, on the expense side of your pro forma, plan on raising expenses about 5% across the board. Notice how sellers almost never show expenses in their operating memorandums, just rents going up. I wonder why that is. Okay, but us lenders, on the other hand, always during good times and bad times increase expenses by at least 3%. But since we still have high inflation above 6% right now, don't you think you should perhaps raise expenses a bit more than that, maybe up to like 5 or 6% across the board? I think this makes sense. So think about doing that. Okay, let's get into critical mistake to avoid when buying a multifamily property number 3. Not locking in a long-term interest rate. Oh my God, I know the pain from this one. I just lost too many loans on multifamily purchases during the last year because of rates skyrocketing. And you absolutely do not want to make a mistake on this one. A last minute rate increase of a half a point or perhaps even a quarter point before you could lock the rate could make your deal totally unprofitable. Try finding a loan program where you can lock the rate at application. Okay, we're talking about some regional banks, credit unions can do this. Freddie Mac can also do this on loans under $6 million. Okay, but if you have a good relationship with your community bank, tell them that you just are not going to risk doing a loan with them if they cannot lock the rate at the beginning. Okay, and a lot of them, the smaller banks actually do borrow money on the short term. I mean, we're talking about like overnight, from the feds or other banks, and so it's really risky for them to make a loan and lock the rate at the beginning. But still, this is really important for you to try to negotiate this with them as well. Okay, and I find it's a good practice always to do 4 different pro formas with each one raising the rate by a quarter point and know ahead where your deal is going to hit a brick wall on debt service. And this is going to keep you, so if you see that you have to raise, or lower the purchase price like a half a point, if your interest rate goes up a half a point and you can't raise the purchase price, you're going to know that ahead of time from this brick wall pro forma as I'm talking about. Okay, let's go into critical mistake to avoid when buying an apartment building number 4. Deadlines on contingencies and closing are just set too early in the purchase contract. Because it's more of a buyer's market right now, this is a great time to give yourself as a buyer more time to get all the due diligence done. So be sure to write in to the purchase contract, I think 75 to 90 days for closing and 60 to 70 days, I think 60 to 75 days actually, for contingency dates, including the financing. And don't start the clock ticking until you get the financials needed from the seller. I mean, that's really important. You could do that. Okay. Let's get into the critical mistake to avoid number 5, paying too much for a property that needs value adds. This is just not a good time to buy a property that has a lot of expensive or even moderately expensive value adds. And you're thinking that, okay, if I could just spend this amount of money, I could raise rent so much. Okay. Because of low inventory right now, you're probably going to already be paying too much for this property. So if you do plan on doing some improvements, stick with the low-cost operational ones, like rebranding the property with a new name and to have a new website made for it. And just do the inexpensive stuff. I just did this, recently on a rental property. We're talking about fresh paint, new window coverings, new wall outlets, and sink faucets. That doesn't cost much. Maybe throw in some new light fixtures as well. Okay, so let's get into the big one and my favorite, as far as critical mistakes to avoid when buying an apartment building today. Okay, this is number 6, not recession-proofing your investment. I don't know why, and people don't think of that more often. Not only because we're on the edge of a recession possibly, but you just never know. They average about every 6 years. In America, and I've been through 3 in my last 26 years of doing my job. Okay, so here are 3 of my best recession-proofing strategies. Number 1, make sure the property will break even at 75% occupancy, where all the expenses and the mortgage is paid. If that doesn't pencil, you can go up to 80%, but no higher. This means that if you have other sources of income to fall back on during a recession and you lose 20% occupancy, you can still pay the properties, I'm talking about the subject properties, expenses and the mortgage payment and not risk losing the property. Okay, let's talk about recession-proofing strategy number 2. Okay, this is so important. Have 4% of the purchase price in working capital at closing. During the Great Recession, and that was like the worst recession since the Great Depression, my clients that had working capital of about 4% did not lose their properties, okay? Because they could kind of like limp through until they could get things going again. This is your rainy day fund in case rental income drops or you have unexpected repairs as well. We're talking about 4 or 5% of the purchase price to be put in savings, before the deal closes. Okay, boy, you're going to sleep well if you do this one. Okay, let's go into recession-proofing strategy number 3. Keep all monthly payments and credit card balances low. This is both for personal and business. If you do need to feed your new acquisition some cash flow, being able to afford to do this and having more cash flow because you're not just stuck with so many high payments will be a godsend. And again, during the Great Recession, my clients who did not have high credit card balances and the high mortgage payments and everything, and also high equity line payments, because those go up as rates go up. They found that they could actually, more than limp through the recession. Okay. So if you enjoyed this video as much as I enjoyed making it, please subscribe to my channel and hit the thumbs up button. And for today's multifamily and commercial mortgage rates, tap the link below for Apartment Loan Store, where you will find 8 very valuable rate sheets that are updated daily. These could really come in handy for you to see where rates are when you're penciling in debt service for the properties you're interested in buying. You will also find guidelines for all of our loan programs to see if you qualify and the property qualifies. To get a free first chapter of my book, click the link below for the Encyclopedia of Commercial Real Estate Advice. Thanks for watching and see you on the next episode, and please be well.